Happy Sunday, Tampa Bay. We're with you for another week here to talk about the Tampa Bay real estate market like we are every Sunday at 10 here on the Duncan Duo Show. When we're not on air, make sure to follow us on all of our socials at The Duncan Duo, X, Instagram, Facebook, YouTube, TikTok, you name it, at The Duncan Duo. Follow us. We're always putting out relevant content to keep you updated on all things real estate in Tampa Bay. Lots of things happening in the political world applying to real estate, and I want to break a few of those down just to help you understand how it impacts the market and what you can be prepared for. First and foremost, the Trump administration has made it very clear that they want to have some impact on housing affordability and some positive swings in the real estate market. They have obviously pressured the Fed to lower rates. I don't think we're going to get more Fed rate cuts until there's a potential new Fed chair a little later in the year that has to get appointed and then voted, sworn in, and all of that. So that's going to take some time. But we've floated the idea of portable mortgages, 50-year mortgages, which I don't think are really going to have much of an impact. We have now come to the place where we're going to regulate out or potentially regulate out large institutional investors from buying single-family homes. That is another focus of an executive order of the Trump administration. Again, probably, truthfully, a small impact in terms of what it will do. The percentage of people that are kind of put out by the institutional investors for, from a buying standpoint, it's not that much. I mean, Tampa's one of the prime markets for it, but it's not a lot. They're not buying like they used to, and certainly not pushing out as many families as they used to. That would have been a lot more effective during the COVID years or pre-COVID years than it is now in terms of the activity of them buying for rent. The numbers just don't make sense in our market based on taxes and insurances. So that's not much of an impact. I do think we'll see continued Fed rate cuts in the second half of this year. I do think Tampa Bay will have a positive real estate market this year simply from the momentum of, the further away from the hurricanes, the potential property tax relief that our state is floating, which I think will move some people here. Continued no state income tax, while other states are pushing legislation that is going to push people out, specifically wealthy people. California right now is floating a billionaire tax, basically a 5% revocation of wealth to the state, which is the craziest thing I've ever heard. It is being floated, and it is causing successful tech entrepreneurs en masse to leave. They're losing so much money just by floating this crazy idea, thinking that people that already pay 13% in state income tax are now going to agree to let California take their wealth from the companies they've created. So all kinds of stuff on X about that. But the point of that is that is going to move more people to Florida. Now, the biggest target for that is probably Miami, but there are a lot of people that are going to get attracted to the Tampa Bay area as an alternate when they tour Miami, and maybe it's not their vibe, and then they come to Tampa. So, again, a lot of positive things. But the thing that the Trump administration did recently do that did have a considerable instantaneous impact on mortgage rates that I will tell you is a short-term window was a $200 billion mortgage-backed securities buy from Fannie and Freddie. Now, that instantly cut interest rates almost a quarter of a point in the same day they dropped down pretty heavily. We're seeing rates in the fives now. We're seeing buyers get off the fence. We're seeing sellers sell because they can buy and get something in the fives and sell their house in the threes or the fours and not feel like they're getting hosed. It is going to move the needle on momentum in our market. We're going to see more transactions this year. We're going to see higher prices, not dramatic on the higher prices. I want to make it clear by kind of putting us into a framework, not compared to what we saw during the COVID years where we're in 27 to 30% appreciation. But I could see a year where we might see a 5% increase on our average sale price, maybe to outpace inflation for the first time in a few years. So lots of good things. But the Trump administration, the reason why I want to make it clear that this is short term is because eventually those bonds are going to kind of run out and the money is going to have been spent, and then rates will float back up again. So this is a short term window. So if you have been thinking about buying and you don't want to wait until the end of the year, now would be the right time. How long the rates stay where they are now with the MBS buy is hard to say, but it is a short-term window, because when that runs out, they'll bump back up again until there's more Fed relief or qualitative easing, printing money. There are certainly things the government could do to lower rates more outside of just the Fed, but right now that is a short-term window. So I want to encourage you that if you looked 6 months or a year ago, or you're thinking about, doing something in the relatively near future, you should jump off the fence and do it now, or it's going to cost you more money, simply from rates rising until what I suspect would be some relief again late in the year with a new Fed chair. And there's no guarantee of that. Certainly, I believe the Trump administration wants that to happen, but there's certainly no guarantee that happens. So those are all things that are happening in the real estate market that are that are moving it both politically and then locally. So again, you're listening to the Duncan Duo Real Estate Show. Andrew Duncan at the Duncan Duo, Twitter, Instagram, YouTube, TikTok. I saw an article this week that the National Association of Realtors is calling for federal incentives to spur investor sales. And of course, one of the obstacles, you've got NAR pushing this, and then you've got the president kind of against it. I'm definitely a free market person. I don't love a lot of the overreach into the market, except for when, maybe it's like the Fed, for example. I don't love how they've determined to control interest rates in a free market compared to everyone else in the world. At the same time, I feel like there's just a lot of overreach into let's do this, let's do that. And I think most of those things don't end very well. You need to let the market shake itself out. And too much influence one way or the other can have dire consequences in the long term. So I want to preface this by saying that I'm very pro real estate, and I'm optimistic, and I love the movement from NAR and from the administration to help kind of recover our real estate market in a bit. I think some of that is in response to a lot of people's belief that the Fed has not been aggressive enough in cutting rates, and some of these artificial steps to try and stoke the real estate market might have already been taken care of had that not happened. But nonetheless, I'm very much a free market guy. So when I see these things happening, it does cause me concerns. We've gone down these paths before. So the good news, though, a positive real estate market in 26 is already underway in Tampa. Already seeing record visits on my website. We had December is our best month of the year. January is going to be on pace with December, which is super rare. January, February are usually really slow. So a good start to the year. Speaking of good start to the year, if you want to start your year with a waterfront property in Baycrest, man, I've got one of the best waterfront opportunities on the market right now. 4643 Baycrest Drive. This is in Baycrest Park. I lived in this area for a long time, and I really do like this area. This is a 3-bedroom, 3-bath, private pool, waterfront, listed for $825, just short of 1,900 square feet. Beautiful property, waterfront oasis, great vacation opportunity, custom built wine cellar, luxury functionality and fun, waterfront views, inspired in 4-panel glass. Just the features go on and on and on. Check out the pictures on our website. Another thing that I really love about the home, you've got a floor plan that's kind of good for entertaining, but also good for formal rooms. 200 plus square foot dock, complete with a 6,000-pound boat lift, and a 462 square foot bonus space, perfect for a game room, gym, or additional suite. So this area in general, I lived there for several years, and the thing I liked about it was that it was waterfront. It didn't seem to have as many obstacles with storms, just based on how the canals are set up. I also liked the commute wasn't too bad. I could get in and out of downtown Tampa while not being in downtown Tampa. I didn't feel as congested as South Tampa. And that area in general, when I lived there, one of the drawbacks was that it didn't have as many restaurants. It didn't have as much commercial development, and that has massively changed. So definitely a great house, a wonderful waterfront opportunity. And again, that address is 4643 Baycrest Drive, listed at $825. You can get more information. You can Google the address. You can see our YouTube video. You can go to our website at theduncanduo.com and look at our featured properties. But a great opportunity on the market right now. And speaking of waterfront and luxury homes on the market, that is one of the places in our market that I am very bullish about. I mentioned it in the beginning of the show, and I think as we start this year, so far this year we had a $7 million closing. We've got multiple multi-million-dollar offers out there. We've got homes above $1 million coming on the market, and so the reason why I think there's so much momentum in our high-end market this year is some of it is pent up. That market got smoked from the hurricanes. It zapped a lot of demand for last year because so many of those homes were damaged. And it took a while to rebuild them. Some of the infrastructure was damaged, some of the areas around some of the waterfront. And then there was a fear factor of people deciding and thinking about moving somewhere else. People have a short attention span. That hurricane stuck around for a little bit, but now it's kind of off the radar, that hurricane season that we had that was bad. So now you've had a year and a half since. You've got a new segment of buyers that are looking. That hurricane stories a year and a half in the past, people aren't paying attention to it. So I think that has a really positive impact on our high-end market because that was a lot of the real estate that was affected by Helene and Milton in 2024. So another reason our luxury real estate market is going to continue doing well, you have these polarizing political plays in states like California and New York. I mentioned the billionaire tax and the 13.3% state income tax in California. That is moving wealthy people away from California. And there's plenty of those people because of the way California is set up. It's very spread out. In Southern California and even in Northern California. And there's a lot of people that go to Miami and they don't like how congested it is, or they don't like how, they just don't like the setup. So I think Tampa is going to benefit a lot from those wealthy people from California. And then, of course, in New York and in the Northeast, you've got a mayor in New York that is very polarizing and very socialist in nature, and it is causing plenty of New Yorkers to say, I don't know if I want to keep living here and get taxed to death. I don't know if I love these new policies. And even before they give him a chance to see if these things work, there's plenty of them that just naturally want to leave. So I think you're going to see an exodus of that. And then I think those states are also going to gain in population. I think there's going to be people that want to move and live in that, but probably I think an algorithm of wealth probably alternating. If you think about like the stock market, how major hedge funds or large banks will alternate or rotate out of certain asset classes depending on the time of year, depending on how that market's doing. I think you're going to see the same thing. I don't think those areas are going to stop being desirable for people to live in. I just think you're going to see a rotation out of the people and the income that live there. I think you're going to see people that are wealthy that don't want to be taxed moving out of those areas and moving to areas like Florida where we don't have that state income tax and where we potentially have an abolishment of a homestead property tax. And that is certainly on the agenda and something I'm paying attention to. So we're going to continue this conversation about the Tampa Bay real estate market after a quick break here on the Duncan Duo Show. So we're back here on the Duncan Duo Show talking about the Tampa Bay real estate market. Andrew Duncan, the Duncan Duo team, LPT Realty. When we aren't on air, make sure to follow us on all of our socials at the Duncan Duo. I was talking to my team this week, and I know I have a lot of real estate agents that listen to the show or people that are kind of adjacent to the real estate industry. And one of the things that I wanted to mention on the show for anyone that is in the real estate business or maybe in a comparable market like mortgage, one of the things that I said to my team this week was, I suspect 26 and 27 to be massively better, and potentially 27 and late 26, even a boom for the residential real estate market in Tampa Bay. And we've already started to see that pick up early in the year. And unfortunately, I think there are a lot of real estate agents out there that are going to fail at capitalizing on it because they're running off the same 2025 operating system, and then they're expected to get busier in 26. So one of the things that I've really encouraged our agents to do is, really have a good solid grasp on their time, manage their time better, time block, be coachable to someone who's been through these ups and these downs in the market. Because if you're going to succeed in a market where there's more transactions and more money to be made and more opportunities to serve your clients, you can't create more time in the day, but you can become more efficient with your time. And I think the most successful real estate agents in 26 that learn and adapt are going to do just that. Simply not operating the same way they did in 25. So, if you're a real estate agent and you're listening to this, the best advice I have for you is really sit down and get a better game plan, manage your time better, and inject a better operating system into your life and business to be able to capitalize. Because if you're set up to do, 10 deals, you're going to do 10 deals. If you want to do 20 deals or 30 deals, you better be set up to be able to handle 20 or 30 deals, because if you operate from a 10-deal mindset and a 10-deal time structure, you're going to fail and you're going to not serve a lot of your clients. So that's my real estate tip for this week. So speaking of, I touched on this a little bit earlier, but the drop in mortgage rates, this is also a major opportunity for people to refinance that have been sitting on the fence. If you've been thinking about lowering your payment, if you've been thinking about, getting rid of your PMI, if you've been paying attention to mortgage rates, we're at the lowest mortgage rates that we've seen in 3 years. Now, there is a suspicion that we'll get to lower rates in the later half of this year, but maybe you can't wait, and maybe that doesn't happen. There's a lot of variables at play, but Trump buying mortgage-backed securities in the amount of $200 billion pushed rates down about a quarter point. So if your interest rate is in the high sixes or into the sevens, you should definitely look at refinancing. Go to citywidetampa.com, especially if you have a VA or FHA mortgage. There's so many people that don't know this. VA and FHA allow you to do a streamlined refinance product to simply lower your rate, not cost you out-of-pocket money. It allows you to lower your rate while not going through the typical hassles and qualification, meaning that if the house, if the house won't appraise, or if maybe you wouldn't qualify today, but you would have a few years ago, those are things that are much less relevant in a streamlined refinance than in a typical refinance or a typical purchase. So we have a few great loan officers, Melissa Morgan. Combined those two there real quick. Melissa Morgan and Oscar on our team that can help you do a refinance. You just have to go to citywidetampa.com. There's so many people out there that can benefit from this. And again, could you wait and maybe it goes lower? Possibly, but it could also end up higher, and the savings that you would have over the next several months or up to a year before rates drop to the low. And the reason why I say right now is the time to maximize on the refinance is because the Trump mortgage-backed security buy that he did, where he's using Fannie and Freddie money to buy $200 billion in mortgage-backed securities, it is a short-term thing. Okay, it instantly lowered rates. Once that is kind of used up, the rates will float back up again until there's more action from the Fed or more action in treasuries. And that's not likely to happen under the current Fed chair and based on the economic data that's coming out. I suspect we may not see another rate cut until March or April at the earliest, may not any at all based on the political tension between Trump and Powell. So the mortgage-backed security buy is a short-term window that will not last forever. So we could see, do I think we eventually get to a place where rates are lower than they are right now? Yes, I think we do. How long that takes is the question. And if you're in a tough spot financially, if you've missed some payments, if you've had some job loss, if your property isn't worth what it used to be, that you can still do a streamlined refinance and lower your payment. So again, the easiest way to do that, you can go right to the application page. And if you've got questions, you can definitely contact Melissa, Oscar, Morgan directly from that link. And it's very easy to remember, Citywide Tampa. So it's Citywide Tampa, citywidetampa.com. Just go to that link, go right to the application, start your process, and mention when you speak to them that you heard it on our radio show here on WFLA News. So again, great opportunity for refinance right now. There are plenty of sellers that we're meeting with that are kind of weighing that, right? They're weighing the financial benefits of, do I refinance or do I sell? That is one downside of refinancing, is you can't sell while you're refinancing. So if your house is on the market and you're going to do a refinance, it may have to come off the market in order to qualify to do that. So we're going to continue this conversation with our next segment on the other side after a break here on the Duncan Duo Show. So we're back here on the Duncan Duo Show. More optimistic real estate news out there this week, but I want to make it something really clear, okay? When you have the real estate is the slowest moving market in the world. Again, this is Andrew Duncan, the Duncan Duo team, LPT Realty. I have friends that do, private equity. I have friends that have millions of dollars in the stock market. I have people that do a ton of crypto. Those are really volatile markets, meaning that you can see like 5 and 10% swings in a day. Much less, sometimes even an hour, much less months at a time. The reason why the real estate market is such a stable place for investment and a stable place for to see things and how they work is because it is so slow moving. The things that happen in real estate take a long time to trickle down to actually having an impact on prices. So when you hear this optimistic news, okay, it doesn't mean that prices are all of a sudden rising, okay? It doesn't mean that it's now all of a sudden massively more expensive or that you can ask more for your home. That just isn't reality. We've been in a depreciating, especially when you compare it to inflation, a depreciating market for, a year plus, meaning that homes aren't selling for slightly less than what they sold for 3 or 6 months ago. We're starting to see that corner turn where things stabilize and maybe we see some decent appreciation this year, but it's not here yet. So when you hear this, just know that it's kind of like, if you were paying attention to a stock and news hit, the stock would surge instantly, okay? When real estate news hits, it doesn't surge prices instantly. However, it is a really good sign towards future benefits if those things keep up. So it's just slower moving. Those positive things that happen definitely lead towards, if they continue to pile up, increases in our prices, but it doesn't lead to instant gratification like in crypto or the stock market. So U.S. December existing home sales increased 5.1%, and pending home sales hit the highest number nationally in 3 years. And we're seeing some of the same thing in Tampa. So what does that mean to you as a buyer or a seller of real estate in Tampa Bay? It means that if those things keep up, we're probably heading towards a better real estate market in 26. Again, assuming no hurricanes, assuming no national disasters, we're heading towards a better 2026 real estate market than we saw in 25. We're heading towards more transactions and higher prices, but those things need to keep up. Your price doesn't automatically get higher because we had a good month. Those things need to build on each other. But as a smart buyer or a smart investor, these are the things that should tip you off to start thinking about pivoting and looking into investing in real estate. I taught a class this week about buying rental properties. At one point, I owned a lot of rental property, and I've divested of some of it and certainly moved that money into other investments and other properties. But it is a great time to think about that is before the prices start surging. So real estate investing is something we teach our agents, but it's something we're proud of. And the last couple of years, it's been hard to look at real estate and say, yeah, let me invest here. Unless you were able to get some killer deal, you saw money moving to other things. That is starting to change. You saw real estate stocks and mortgage stocks increasing pretty considerably over the last couple of weeks with the action from the Trump administration and his discussion of wanting to improve the real estate market. Whether or not you agree with his actions, the actions do have an intended consequence of a very quick improvement in real estate. So all of these things lead towards, if you're fearful of a market crash, every month that we pile up existing home sales and pending home sales increasing, the market is telling us, even though it moves slower than some of these other markets, it's heading in a direction where things are going to be pretty healthy. So home buyers, expect that if this news continues and you wait, it's going to cost you more. Okay. Home sellers, if you're upgrading, you should be looking to do that now. You should be getting your house on the market to go out and buy, because far too often I see home sellers say, oh, I want to wait until my price gets to, I got a $450,000 house. I want to wait till my house gets to 500 so I can go buy my $1 million house. Had this conversation this week. Well, so your 450 gets to 500, that's roughly a 12%, a little short of a 12% increase. What do you think your million's going to do? Think it's going to stay the same? Think it's in a vacuum? It's going to go up 12% too. You just lost money by waiting to get the number you want out of your house. Far too many sellers get this emotional attachment to a number, and it's bad math, especially in a move-up scenario. So sellers, especially if they're buying, they should be selling right now and taking advantage of this window where rates are lower. Buyers should obviously be doing it too, because the data is starting to point to the direction of an improved real estate market. And if we boom in 27, then you're going to win with great appreciation. There's so many people that are going to just wait, and they're going to miss it. Or they're going to wait until it's too late, and they're going to overpay. And one of the things that I've seen in real estate markets through the years is when rates get lower, and we suspect late 26 and 27, we're going to see more interest rate relief. Okay. When they get lower, prices rise dramatically. Okay. People buy real estate based on the payment. The majority of the time, it's the payment, not the price. So if that happens and you wait, you missed it. Okay. You missed the gain. You bought the asset too late. You bought it after it already went up. You want to buy it before it does that. Okay. So this data that's starting to trickle out is kind of pointing you in the direction that things are going to get improved in real estate. And home sellers, the other reason why you should look at doing it now, especially if you're moving up, is because you have to pay more attention to the value proposition on your buy and the dollar exchange on your buy than you are to your sell. Okay. If you're moving up, if you're buying a higher priced home and you expect prices are going to rise, you're losing by waiting. And people don't understand that. I had 2 conversations this week with sellers who were waiting until they can get a certain number to go out and buy their more expensive house. And not because they have to need the money, not because they have to, because they can qualify with the price that the market will bear for their home. They can qualify to buy the new home. They're just, it's not it's an ego. It's a mental thing. It's I want to get to 500 because I want to get to 500. And then they're losing money out of their ego. So the reality is that home sellers are upgrading, need to act sooner. The only people where it really makes sense, to sit and wait are home sellers that are downgrading. If the suspicion is that prices are going to rise, well, yeah, the home seller that's moving from a 500 to a 250 will make more money selling their 500 than the loss in buying their 250. So again, in the last segment of that, and the last part of that matters is what is going on in the real estate market where you're buying. If you're doing it in the same metro area, in the same market, everything I talked about applies. The only time where it may not apply, or it may apply more aggressively, is if you're buying into a real estate market that is more aggressively growing or declining than the one you're selling in. So those things certainly matter, but far too often people don't have the vision to look ahead. It's funny. I one of my passions is cars, and I enjoy as a hobby racing cars. And so I go to the Motor Enclave on Sundays sometimes, and there's a drivers club thing that I'm a part of. And there's an instructor there that's a professional race car driver that takes you out and tells you, what to do and gives you this idea. And I thought of this great analogy when he was telling me this while I was driving one of my cars. And he said, you have to look not just at the next turn, but you have to be looking 2 or 3 turns ahead to where you need to position your car. And it was such a great analogy because it tells you how important vision is, especially when you're moving fast in the vehicle. You can't just be looking at that turn and be like, oh, now it's time for me to handle this turn. You have to know before you get to that turn where you're going to be. And it's the same. So as you go out and you watch people that haven't gone on a racetrack before, and they haven't had instruction before, they screw up all the time because they don't start turning the turn and getting in the right spot until the turn, right? And so it's interesting when you see sometimes these people that don't listen and they're sliding all over the track, or they're almost crashing, where sometimes they are crashing. Like there's been a few crashes there. So it's the same thing for real estate people, for people that are selling their house. Okay. You cannot make the decision based on the turn that you're in, the house that you're in. You have to make the right real estate decision based on the actions after that too. And so many people don't take that into consideration. They say, I'm going to sell, but I can't sell until I get 500. Well, why can't you sell? Because I really want 500. Okay. So you're going to wait for price to rise 12%. And the same thing is going to happen with what you're buying. If you're buying something more expensive, you're losing money. You're being a stubborn idiot. And so you're basically being the guy at the racetrack that says, I'm not going to turn the wheel for this turn until I get to the turn, instead of positioning yourself accordingly to be able to handle the other turns that are coming. So hopefully that makes sense, but it's definitely a common concern that I have when I talk to people that are in this space right now. So again, just to summarize, real estate, slowest moving market in the world. You look at silver and gold, and they skyrocketed recently, right? Bitcoin will have periods of time where it goes up 5 or 10% in days. Certain stocks will 20, 30, 40% surges in a day, okay? Real estate doesn't do that. All of the policy that you hear about, the data, the mortgage-backed security buy, the existing home sales increasing, the in Tampa, a year away from a hurricane, or, property taxes might get abolished. Like, none of those things instantly moon real estate. Okay. It is so slow moving. It will take time for all of that to trickle down and have an impact positively on real estate sales. And it will take a long period of time in an antiquated industry. And let's face it, real estate is antiquated. Okay. I mean, we're still signing documents at title companies, and I mean, there's still people mailing checks. Like, title companies mail checks, and I just laughed to myself thinking some of these other businesses I'm a part of and involved with, I couldn't imagine calling up some bank and mailing me a check. It's just crazy. So real estate's antiquated. It's slow. These things that happen are not going to move the needle like you think. If you're behind and you're down on your house and you hear all this news, it doesn't mean it's all of a sudden up. Okay. It will take months of that consistency in order to move the needle with real estate values. There's just so many hands in the cookie jar. You've got insurance, you've got taxes, you've got these other costs, you've got neighbors, you've got their financial positions, you've got comps. It's just so hard to value it. It's not like owning a stock or a coin that is a commodity. There's a uniqueness to it. So hopefully that helps you understand real estate in a full perspective and what this positive stuff that's happening means for the long term. But more than anything, the biggest point I want to get across is if you're a home seller selling your home to upgrade, stop putting the primary emphasis on what you get out of your house unless you have to get that amount. If you have to get that amount because you can't qualify or you don't have enough money to buy the next house, that's different. But if you're doing it out of ego or trying to hit a target or wanting to beat your neighbor or wanting to get to a certain number to make you feel more comfortable, not qualified, just for you to feel better, you're losing money. You're losing money because the house that you're going to buy is going up if it goes up at the same clip you lost. So Hopefully that helps you make the right decisions. And when you're ready to make the right decision, hit up DuncanDuo.com for your free home value estimate. You can set an appointment with one of our top agents, whether you're looking to sell an inexpensive property or a super luxury high-end property. We'll align you with the right agent on our team, the specialist in the market that you're looking to sell within. And you could do that again at DuncanDuo.com. Again, that is DuncanDuo.com. We'll be back to wrap up the last segment after a quick break here on WFLA News. So we're back here on the Duncan Duo Show talking about the Tampa Bay real estate market. Andrew Duncan, the Duncan Duo team, LPT Realty. So had something interesting pop up this week. And I'm a big proponent of using AI. I'm a Grok person. I'm an Elon guy. In fact, I've got a SpaceX T-shirt on today because I'm an investor in SpaceX. And so the interesting thing about AI, it is so moving so fast that it is starting to outpace humans in terms of how quickly it can do things in its own analysis. But where it hasn't, at least in my opinion, nailed it yet is home values, and it's going to have a hard time doing that. So I ran through, and specifically, especially with luxury stuff, but I ran through some properties this week with Grok, asking it to value the property, knowing what I know about the neighborhood or the property, and it was pretty far off because it's using all the online aggregators to pull its data, right? So it's going to Zillow or Homes.com or Realtor.com or wherever, and it's pulling data, and that's how it's kind of calculating it, and it's looking at tax rolls. Well, the problem is that those sites are markedly off. If an automatic valuation, and I'm not saying it won't get there because I think there's certainly a chance that it will, and I think there is a chance that it has gotten better in neighborhoods where there's where the houses are very comparable, where there's it's very kind of consistent in a neighborhood. If you've got a neighborhood in Riverview where all the houses are between 400,000 and 600,000 and they're all kind of comparable, they're all built around the same time, it can be relatively accurate there. It can be accurate in condo buildings, but where it struggles is with unique or higher end homes. So, I've had customers be like, oh, well, I put it in ChatGPT or I put it in Grok and it said I was worth this. And if the automation was effective enough, then Zillow wouldn't have lost billions with a B, buying and selling real estate. Zillow got out of the buying and selling real estate business. They had all the data. They were the leading firm in the space. They opened up this huge portal where consumers could sell their homes directly to Zillow, and then Zillow would turn around, flip them, and sell them. Zillow abandoned it because they were losing money hand over fist, because what they learned is computers can't get inside the house. There's still enough variables at play that computers can't quite calculate. And consumers can't do an inspection. They can't determine what might be wrong with the house, what's not up to code. Those things don't exist with valuing a lot of other things. Now, valuing commercial property or income property, that's a math equation. But when you get into residential real estate, especially if you're looking at luxury stuff, it's not very accurate yet. I plugged in a particular luxury property and it valued it based on all the inputs I put in. It was like 35% over market. I was like, man, Grok, please buy the house for that. So it's getting there. It is an incredible tool, but it is not up to par yet with valuing real estate. It can do a lot of great things, and maybe it will get there. Maybe with photos and extra things that you can load into it, it'll eventually improve, and I think it'll probably be there at some point in the future, but it isn't there yet. So if you've grokked your home or plugged it into Claude or ChatGPT and you want to know what it's worth and you're asking AI what your house is worth, it isn't there yet. I promise you, I've done it. I've tested it. It's off. again, in the circumstances that it is accurate, it's typically going to be in a condo building where they're all the same, or where there is a lot of product exactly or specifically comparable, same floor plan, same year built, same architectural design, same builder, all those things. When that's present, it can get pretty close. But we do live, especially if you go across Tampa Bay into some of our most high-priced communities, that's not what you see. You don't see the cookie cutter. You see a lot of different architectural designs. You see big houses, small houses in those areas and neighborhoods, which is a lot of Tampa Bay. It's not there yet. So there are a lot of things AI is doing. There are a lot of things it can help with. It's an incredible tool, but it hasn't quite grasped how to evaluate real property yet. So again, you're listening to the Duncan Duo Real Estate Show. When we aren't on air, make sure to follow us on all of our socials. We are at the Duncan Duo, Twitter, Instagram, YouTube, TikTok, Facebook. I said Twitter. I mean to say X. I got to get that right. I got to say X. If you're a real estate agent and you didn't have the year you wanted to have in 25, I want you to have the year that you want to have in 26. We're looking to grow. We've launched a new market VIP program with Realtor.com that is already having our agents out writing offers and putting homes under contract within just a few weeks. And we are looking to hire agents. So if you didn't have the year that you wanted, if you don't feel like you're getting coached, if you also don't feel like you're learning about wealth building, we do a Wealth Building Wednesdays class at the office where I teach the agents things I've done to grow my wealth and make good financial decisions. And then we bring in guest speakers and so our goal is having real estate entrepreneurs that we can coach and grow, and that they can also go out and build and make good financial decisions as well. So if that's something of interest, you can go to jointheduo.com. You can apply for our open positions there. You can set a Calendly appointment. You can message directly with our team. You can also register for upcoming career nights. Again, that is at jointheduo.com. Thanks so much for tuning in, and have an awesome rest of your Sunday, Tampa Bay.